Yes, welcome back everybody to Altcoin Daily, where you subscribe for one video per day demystifying this cryptocurrency market. My name's Austin. In today's video, we're going to look at 5 different charts: the Bitcoin Mayor Multiple, the current premium on GBTC, the pool multiple, meaning what the miners are doing, as well as some technical analysis, all to determine is now a good time to buy Bitcoin, or if not now, when. So, like always, check the timestamps down below in the video description, and let's jump in, starting with our first metric out of 5, the Bitcoin Mayor Multiple. Introduced by Trace Mayer as a way to gauge the current price of Bitcoin against its long-range historical price movements, i.e. 200-day moving average, the Mayer Multiple highlights when Bitcoin is overbought or oversold in the context of longer timeframes. The Mayer Multiple is calculated by dividing the current Bitcoin price by the 200-day moving average of that price. So we see the yellow is Bitcoin's price through history, and of course we see big peaks and big valleys indicating is the current price of Bitcoin overbought or oversold. And you can see the Mayer Multiple is getting less volatile over time. It is worth noting, as the market becomes larger and less volatile, the peaks are becoming less exaggerated. This is because a 200-day moving average baseline is a statistic yardstick against an ever-growing, more stable Bitcoin market. So you, as an individual, always have to keep that calibration in mind, meaning this metric probably is never going to get back to those highs, ultra highs, and ultra lows of those peaks and valleys. So let's get to it. What is the current metric telling us? Right now, with the Bitcoin price around $41,000, the current Mayer Multiple is 0.86. And historically, anything under a 2.4 has been an historically good buy. Why 2.4? Well, simulations performed by Trace Mayer determine that in the past, the best long-term results were achieved by accumulating Bitcoin whenever the Mayer Multiple was below 2.4. Since these simulations were based on historical data, they are purely educational and should not be the basis of any financial decision. So here is the chart. This line represents 2.4, and anything historically, whenever the Bitcoin price has been under a 2.4% Mayer Multiple, that was historically a great time to buy. And what do you notice? You notice that most times in Bitcoin's history was a great time to buy. In fact, the average Mayer Multiple since the creation of Bitcoin was 1.42. The Mayer Multiple has also historically been higher than today's value, 0.86, 78% of the time. So this is telling us that Bitcoin's a great value right now. It's saying the market is oversold for Bitcoin. So I encourage you to give me your thoughts on this metric down below. Do you like it? Do you put a lot of credence into it? Or do you want to see other metrics? This is just one of 5 today, so let's keep moving. Next up, what about the miners? Well, to answer that, let's look at the pool multiple, or Puell multiple, however you pronounce it. The Puell multiple graph is showing the relation between the BTC mined in a day, expressed in US dollars, and the 365-day simple moving average. Now, if that still doesn't make sense, let's dig into it. Puell multiple explained. The Puell multiple is a market metric for estimating the level of sell pressure in the market coming from miners. Historically, mining revenue primarily consisted of block subsidies awarded to a miner for finding a block. So, as you know, the last Bitcoin won't be mined for over 100 years, and about every 10 minutes, a block gets mined, and those miners get a little bit of Bitcoin as a reward. The USD value of that reward, of that subsidy, changes on a daily basis as the price of Bitcoin changes. Traders found it useful to consider the value of the block subsidy to determine what sorts of pressures miners faced to sell these rewards to continue operations, since forced sellers in the market tend to bring down price. So obviously the miners are running a business. Eventually, after they get that mining reward, they do plan to sell. And to better gauge that potential sell pressure, enter analyst David Puell. The issue with only looking at daily miner revenue is that it does not tell you how healthy that revenue is over a period of time. So Puell developed the Puell multiple. Right? Because miners don't usually sell that day. Bitcoin miners are actually pretty in tune with the market, and historically, they have shown to wait till bull markets. Wait until bullish price action. So how is it calculated? Well, it's calculated by taking the miner's revenue, meaning that the daily coin issuance they get plus the fees, because miners also take fees, divided by the previous year's daily moving average of the miner's revenue. And it just tells us, are the miners more incentivized to sell, or are they more incentivized to hodl? So what is this telling us? First off, the Puell multiple ranges anywhere from 0 all the way to 20. There is no magic number to tell us, oh, after it gets past this certain number, that's when they have the ultimate sell pressure. It's always just a range. For example, back in 2016 and 2017, that run up from 1K to 20K, it's not like the coin issuance per block changed at all. Same amount of Bitcoin got awarded with every block. But as the network became more popular, not only did the fees per transaction go up, but as the value of each Bitcoin just generally went up as more people bought. Putting that into context, comparison over the last 365 days for miners, that was sell pressure. That was clear sell pressure. Back in 2019, as well as back in March of 2021, we saw sell pressure as well. It got up to, I would say 3.5 maybe. Back in 2019, got right up past over 2. Right now, the Puell multiple is seeing lower lows and lower lows. It is sitting under 1. Meaning that right now, Bitcoin miners are incentivized to hodl. The sell pressure that we may have seen 6, 12 months ago, we are not seeing today. That's telling us that's a bullish signal for the market. The Puell multiple could always get lower. Anything could always get lower. But again, you are never going to get the exact bottoms. Best thing to do is dollar cost average in on the way down and then sell dollar cost average out on the way up. That's my move. And next up, we just went over 2 relatively bullish metrics. Now let's move on to a metric that's unfortunately still flashing bearish. The Grayscale Bitcoin Trust, GBTC. This is a trust that buys the Bitcoin. It's a ticker in the stock market. And then institutional investors, or just Wall Street investors, can then buy shares in that trust. They buy the Bitcoin. They'll custody it for you. They'll do all the hard stuff. All you have to do is buy shares in that trust. Now, when there's huge demand for GBTC, we see a premium on its value. And when we're seeing a lack of demand, we see a discount on that GBTC. Looking at the average over the last 5 years, there's usually a premium. There's an average of about a 24% premium on the ticker. So what are we seeing today? Well, right now, the GBTC premium is at a negative 26%, meaning that's a huge discount for Wall Street investors if you buy Bitcoin through Grayscale. Actually, that means if you buy at least 4 Bitcoin, you would essentially receive the 5th one free if you got a 26% discount on each of those Bitcoin. Outrageous discount. So this is obviously bearish. If investors aren't willing to buy at this huge discount, what makes you think they'd be willing to buy at spot price? Now, again, not the end-all be-all metric. We want to take all of these into consideration and, more importantly, come back to these. Come back in 2 weeks. Come back in 4 weeks. Check back in and see how the market is trending. So let's keep these metrics on our radar. And I will say that if you're looking for the cheapest place to buy Bitcoin, literally 0 fees, check out sponsor of the channel, the FTX app. This app is on iPhone, it's on Android, and you can literally buy Bitcoin, Ethereum, Dogecoin, altcoins with 0 fees. There's a link down below, check it out, and/or use referral code AltcoinDaily, and every time you trade over $10 worth of crypto, you receive a free coin. Link down below, take advantage. Let's go over our final chart for Bitcoin, looking at basic TA. Bitcoin's simple moving average over the last 1,458 days, or 4 years. So the 4-year moving average, which we don't have a lot of data, but historically, even in the most bearish of times, this has acted as strong support for the Bitcoin price. So just to clue everybody in, what is this metric? You would take the daily price of an asset, Bitcoin's price on day 1, day 2, day 3, whatever, over the total amount of days you're averaging. So let's say we want to calculate the SMA price for Bitcoin for 3 days. You take the closing price of Bitcoin over those days and divide it by 3, i.e. the number of days. Pretty self-explanatory. But next question, why are we taking the simple moving average of 1,458 days? Why 4 years? Well, the period of 4 years is important with Bitcoin because this is the period between two halvings. A block is mined every 10 minutes, and a halving happens every 210,000 blocks, which equals about 1,458 days. And of course, halvings have a huge impact on price because if you cut in half the supply faucet of the amount of coins coming into the market, that's a huge supply shock. It obviously affects the price. The history of the simple moving average 1,458 day indicator has proven to show a very reliable support for the Bitcoin price. Okay, so what is this telling us? Well, first off, just know that this is more applicable not day to day or even week to week, but they say when in doubt, zoom out, and this is that. This is a longer term time frame metric. Right now, the 4-year moving average is sitting around a $20,000 Bitcoin. So even though the price of Bitcoin is sitting at around $41,000, if the worst should happen, if we go into a recession, if markets tank throughout the rest of this year, it's nice to know that this isn't 5K, it's not 1K. The simple moving average over the last 4 years, $20,000. Not that much farther down. And just looking historically, we've rarely touched this moving average, but it was a nice indicator of support, of a bottom where we bounced back up, where we touched, bounced back up, touched, bounced back up. And that's $20,000 for us. So give me your thoughts on this down below, but let's keep moving. That is the video. My name's Austin. Like always, see you tomorrow. And be sure to join us at Bitcoin Miami 2022, the largest Bitcoin conference in existence, coming up from April 6th through 9th. I will be there. Hopefully you will be there. And if you want 10% off your tickets, use code AltcoinDaily, link down below.